What's up, guys? Fit to Flourish, and today this is our stocks and coffee for the week. So, what happened in the past week of trading, and what's going to be happening this upcoming week? If you stick around till the end, I'm going to give you a couple stocks that you should be adding to your portfolio. This is not financial advice, but it is financial advice because it's going to be some pretty good stocks. And then also what plays I'm looking for this week. And then also like, share, subscribe if you're getting anything good out of these videos. I'm going to be posting a lot more videos on how we take these plays and some actionable steps to be taken in the markets, and a lot more on the basics of stock trading and just keeping it fun and simple and not doing all those ICT, SMC, fake, stupid strategies. All right, here we go. So stocks and coffee with K5 and Fit to Flourish. Link to the Discord, free 3-day trial below if you want to see what we're about. I'll be trading live pretty much almost every day this week, so feel free to join. And then I am live every night for about 2 to 3 hours reviewing charts and kind of answering questions. Alrighty, so we always start with a quote, and that is, never become so thirsty that you drink from any cup without knowing what's in it. All right, so this applies really well to stocks because in trading, a lot of people are like, oh, I just want to trade, but you're not really a trader, right? And you need to get your feet wet in the market. After a couple of years of losing, you'll get better and you'll finally understand this. But basically, you want to be waiting for good setups, and it doesn't have to be just one setup. Like they always say, like, oh, you need your setup. No, it just needs to be a high probability play, honestly. And you need to document what are high probability plays and what aren't. And then you don't need to trade every day, and you don't need to be putting your whole account in on every freaking play. All right. So make sure that you're waiting for high quality plays, have standards not only for yourself, but also for your plays. All right. Some of the great play calls that we had this week in the group, we had Apple calls 200%, 300%. We had Uber calls that went coin calls that went 1,000%. Uber calls went 50 to 100%. Bull calls, IWM calls, we went crazy on those. And right now it's like the Trump era, so there's like a lot of liquidity sweeps. We get these sell-offs, these massive rips to highs, and in these supply and demand zones, we're getting major movement. There's a lot of volatility, so there's a lot of opportunity to make money. We do have a yacht mastermind coming up in July for our members, and then again, like I said, 3 free day trial in the Discord. Not advertising the Discord, just want to mention it for people who are interested because I keep getting questions. Just want to make it clear. Anyway, so economic data from this past week in the markets. So what happened? So ADP job report was kind of a shock. It was missed by 131K from expectations. So what does that mean? It means that there's a little bit slower job growth in the private sector, which could be signaling some weakening of economic momentum, and it could increase the pressure on the Fed to cut rates sooner. But then later on in the week, we saw with the unemployment dipping. We saw unemployment dipping, and we also saw employment picking up in the broader sectors. So this could reduce the odds of a July Fed rate cut, and it could also bolster stocks and raise Treasury yields. Okay. Earnings this past week, there weren't really any earnings. We're at the end of like the earnings season, and we're getting ready to ramp up for Q2 earnings reports. So look for that. Related news and buzz this week. So what did we see? We saw SPY hit all-time highs of 626.27, record high equity rallies continuing, Dow's flirting with records, the NASDAQ hit all-time highs. So it's being fueled by earnings and seasonal strength, okay? And then July 9th, expect this UF tariff pause to expire. Okay, so any extensions, escalations, or new tariffs could dominate the market direction this week. So that's why really I wanted to kind of say, hey, what is our market outlook for this week? The outlook is that basically be slightly cautious. There's a slightly cautious stance that is warranted this week because of tariffs, and it's upbeat but alert to policy or economic shocks because the markets remain in bullish territory. So we're ripping, but and it's driven by strong labor data, solid corporate earnings momentum, and favorable seasonal patterns. However, important caveats loom. So again, tariff risks. The July 9th deadline is a potential flashpoint, and escalation could reverse the recent gains. We could see rapid sell-offs at these highs, and we're seeing kind of SPY hit this ATR. It looks like it's a turnaround point, but we'll see if we break above 626.50 this week and close above that on the 2-hour time frame, then we can make a move to 636. But if we can't get a close above that, it's looking like we could reverse pretty fast. There's a lot of overbought technicals, elevated RSIs, across major indices, and that could raise the chance for a mild pullback. All right. But keep in mind, the last time that July posted a negative return for the market, specifically the S&P 500, was July 2014. Okay, so July 14 was the last time that we saw July negative, and July is generally a strong month with positive returns in 38 of the past 68 years, with a median gain of 1.14%, which is pretty big. That's actually pretty big. Alrighty. So yeah, to continue with some of the related news and buzz from this week. Like we said, that 90-day tariff pause is probably ending. We saw the U.S.-Vietnam trade deal. So this agreement with Vietnam offered clarity in trade, and it was interpreted positively despite higher tariffs than before. Okay, and then we're also having this Trump-Musk Twitter war part 2. So Trump is establishing an American party, is what he tweeted. And Tesla is kind of not really liking all that stuff that's going on. So we saw Tesla tank super hard from 317 all the way down to 293. So about almost a 10%. I believe that's a 10%. Let's see, that was like a 10% drop. So 8% drop in just one day, before ripping all the way back up to that same level 2 days later. Okay, so a lot of volatility in Tesla. So just kind of be careful. Musk has got those Twitter fingers, and it's not making investors happy at all. All right, and then the Fed chair Powell on tariffs. So citing Trump's tariffs for delaying rate cuts, Powell signaled Fed's cautious stance amid inflation fears. So I think Jerome Powell has like the easiest job in the world. He's just like, oh, we're being cautious, we're not doing anything, and Trump is like ripping him on Twitter. So we're looking for the Fed to cut rates, and if they do cut rates, the market's just going to go even higher, and we're going to see SPY probably around 700. And then we talked about oil a little bit, rising treasury yields. Tech earnings focuses are going to be around Microsoft, Tesla, and AMD for Q2 reports. And then retail events. So we do have Amazon Prime Day coming up this week. And Amazon officially announced that the event will span from Tuesday, July 8th, all the way to July 11th, which is going to be its longest yet. We typically see a run up into the event, and then we have a little bit of a sell-off through the event and then after the event. And then when numbers are reported, if the numbers are really good, which usually they are, then we'll see a pretty big rip on Amazon. Amazon's actually one of the stocks that I want to look for in terms of option plays this week. So I'm going to show those levels in a second. All right. And year-to-date performance, you could take a look at it here. Bitcoin is absolutely blowing up right now, up 17% on the year. All these numbers were pretty much big negative at the beginning of the year, but now we're seeing the S&P, NASDAQ, and Dow, and small caps now positive. So look for that. We also saw a little bit of a switch as it is the new quarter. We saw some stocks starting to get sold off early on in the week, and then some laggards getting picked up like IWM, which is our small caps. We saw United Health get a big move up. Apple was a laggard and got a pretty big push as well. So earnings this week, really the only one I'm kind of looking at is Delta, maybe Thursday morning. But like I said, end of this earnings season, we're going to be starting the third set of earnings reports for the year, which is going to be reporting on Q2. And then economic data this week, the only thing you need to pay attention to is going to be Wednesday, we have FOMC meeting minutes. And then Thursday, we have initial jobless claims at 8:30 a.m. All right. And then, like I said, I'm going to give you guys some stocks that you might want to add to your long-term portfolio. So still, like I feel like still pretty early in the game is PLTR, ASTS, and HIMS. Okay, so those are the main three growth stocks. If you want to see massive gains to your portfolio, those three are going to be pretty big. And then United Health can give you a 25% boost on the year. I think towards the end of the year, we'll see UNH climb its way back to that $400 level. We're still hovering around this $300 level. So UNH for sure. And then we have AMD, which is again another laggard, and Google is trading at a super low PE ratio. It should be way higher. Not really sure what's going on there, but we should see massive gains if you just add this and make it, just sell your entire portfolio and make this your portfolio. I can almost guarantee by the end of the year you'll be up 50 to 100% on your portfolio, just adding these stocks. All right, and then the watch list for options. So this week for day trading and for 2 to 3 day swing trades, watch Google, Apple, Amazon, and IWM. So I'm going to switch the screen here so you can see exactly what we're looking at in these stocks. Alrighty, here we go. Boom and a kazoom. All right, so what are we looking for with Apple? So we talked about Apple. We picked up Apple here, right over here. All right, so we picked up Apple here at this $200 level. Let that thing ride. Made hundreds and hundreds of percent. But now Apple is going to be hitting this 224 level, which is where our volume gap is going to take us. We closed above this 212 level, which is super duper important. And we're making our way above this this volume shelf, which the next volume node is really going to be at like 224, and then above that 232. But Apple consolidated really nicely here for quite a long time, so look to go long on Apple if we hold above that 212 level. All right. And then Amazon, we have Amazon Prime Day coming up. Amazon had a nice little retracement here back to that 219 level we held, and this was the area where I was like, hey, looks like there's a lot of buyers here. And we're in a volume gap that should take us to 239.86. And then our volume RSI is picking up as well. So look to go long if we close above 223.99 on Amazon on the 2-hour time frame. Or if we just open up above that, I'd probably just go long immediately. UNH, we're still at that $300 level, so watch that. Right, Google was in this second demand zone here. And now we're kind of in this volume shelf that should be taking us to 195. So it looks like we're going to be on our way on the upside here. So if Google can hold this 177.62 key level, then we should see a pretty big boom. Our volume RSI is pretty big here as well. All right. So that is going to be it for Stocks and Coffee. So hopefully you got something out of this. A lot of free plays right there and good thoughts on the market. So be cautious. Let's keep winning. It's your boy, Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,